All right, good morning. 20 dwarves. In sooth, I know not why I am so sad. Trying to get that throat open. Oh, there's a huge dragonfly on my window. Very cool. Good morning. In sooth, I know not why I am so sad. Marina wants the Irish coffee, huh? Well, interesting. All right, so let's get on with it. Welcome to Forex.Today, the YouTube community of almost 18,000 foreign exchange traders. Today we're going to cover technical analysis, fundamental analysis, catch the CPI at the 8:30. J&J's off the market. People are freaking out. Is it risk on? Is it risk off? Hey, did you get the China news? Which one's bigger? Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen. My name is Wayne McDonald. I'm a currency trader just like you. I'm also the chief FX market strategist for TradersWay.com, a global foreign exchange broker that would like to earn your loyalty and respect by investing into your education here, now, so that you can develop the confidence and skills you need to trade real money one day when you are ready. And at that point, hopefully they've earned your loyalty and respect. So choosing the execution partner for your new successful Forex trading business will be pretty easy because you'll already have an account. So please visit TradersWay.com. Right-hand side, there's a place to open up a demo. It's a form, takes 30 seconds. Actually, it takes 12 seconds. And there you go. Download MT4, download MT5. Also, by the way, the link is in the description below the video. Also, if you need access to my chart templates, they're $5. The link is in the description below. If you need a link, if you'd like to buy my book from Amazon.com that I wrote, 13, 14 years ago, the link is in the description below. If you'd like to join my live trading groups or take my video training courses like fundamental analysis, technical analysis, day trading, swing trading, monetary policy, macroeconomics. Also, the link is in the description below. Hint, hint, wink, wink, nudge, nudge. If you need resources, they've been made available to you. I've created them over the last 20 years because people have asked me. Cool. Okay. So what else? Ask questions, get involved, and would you please click the like button, tell YouTube this is quality content. Oh, I guess I gotta move that over there. Sorry. Let me pop. Well, no, let me squish this so I can see the chat. There we go. Cool. Okay. So let's just go from where before we get technical, should we go fundamental? Okay. J&J has been paused in the United States. 6 people have gotten sick. Now, the interesting thing is it's not blood clotting. I mean, it is blood clotting, but it's a combination of extremely rare, never seen before side effects. And that's the real big issue. It's not really blood clotting. It's a couple of things that have come together that has never been seen before. And people are like, holy crapola. Okay. So that's the interesting thing. And the reason there's a pause is people didn't get it till like a week after their J&J shot. So everything's cool when they get the shot and they leave and a day goes by, 2 days, 3 days, 4 days, 5 days. I'm sure nobody's following up because I got my shot a couple of weeks ago my first shot, not of J&J, but no one's followed up. They're like, hey, how you feeling, son? Like, hey, what about me? So I doubt anyone's been following up with the J&J people. And the problem is millions of people now have received the shot. And so is it 6 people or is it 600 people that have this rare combination? So that's why they've done the pause. In the United States of America, we have so many choices of vaccines that if they pull J&J, probably won't make a difference in the United States. However, Europeans are already freaking out about getting one of the shots, and now they have a second one to freak out about. So this is going to be a real problem for Europe, I think. Because they're like, well, we still have all these choices. So now they have yet not another choice. So this is going to be a real problem for Europe, I think. So it'll be very interesting to see what happens over the next 2 weeks. I think the CDC wants to see, is it unbelievably rare? Because I think I heard it's 0.0000623 or something like that % chance that you're going to have a negative outcome from the from J&J. Okay. So anyway, yeah. So hopefully everyone is okay. So again, it's not the same as what happened with the other vaccine in Europe where they stopped it because of blood clotting. It's a blood clotting with something else, and I don't know what the other thing is. And they're they can't say, well, this might have happened in the normal population, right? Right? Because usually they say, let's say people start growing unibrows. And they're like, well, you might have had ma'am, you might have had a unibrow anyways. Maybe it's just that you're getting older. Well, in this situation, it's never been seen by medical science, the side effects. So they're like, that's the J&J. We don't know how, we don't know why, but oh my God, that's unbelievably strange. So I feel bad for those 6 people. And I wouldn't be shocked if it goes from 6 to 60. Because again, it happens a week later. So if you got the J&J shot 5 days ago, pay attention. Be ready to ask for help. Okay. So there's that. So people are asking, well, what happens to J&J? How does this affect currency trading, investing, the stock markets? So if the stock market takes a tank today, typically when the stock market falls, the bond market rises. Interest rates go down, dollar gets strong. Okay? Okay? That's what typically happens. But you should already know that. It's just risk off. Okay? Well, Maida says that's why there's no vaccine for her. That's fine. I'm not here to argue for and against that, but really, if you knew there was a it's literally 99.9999623% chance you'll be fine. Well, not just fine, prevented from having to go to the hospital because you got COVID. You're like, really? Only 99.9999613? That's it? How come not 100? Like, you're probably going to be okay. But we'll see. We don't know. And I guess that's also your argument there. Like, that's what up until now it was that, and all of a sudden it might not be. It might be much more dangerous. So, anyways, so I'm not arguing for or against it, right? Cool. But I do think this is going to be a European problem. I guess this is my point that I'm making. The United States will say, "Oh yeah, that's really sad. No J&J." Okay, boom, off we go. Okay. But Europe is already caught in a problem. Okay. They already got caught in a problem where they don't trust one of the vaccines. Now they don't trust 2 of the vaccines. Maybe they don't trust any of the vaccines. And so it'll be bad. Now, let's talk about fundamentals because that might be news. I don't think it's going to. So let's say instead of, July 4th, we have to wait to September 1st in the United States to have some sort of herd immunity or whatever. All right, fine. But it doesn't really change things on the long run. So we just move on.com. But what about the fundamentals? Okay, so maybe that's just short-term news. What about longer-term fundamentals? Have you paid attention to Chinese data? David, I drop all the way down into the 1-minute chart. I'm more than just a fundamental trader. I just happen to be better at that than most, but that's not necessarily my thing. Right? So, let's see if I can find it. La 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 la. I don't even know what that is. China. Oh, what happened to it? I don't know where it is anymore. Maybe the calendar on traders. Let's go to Forex.Today. Let me check that calendar. I don't have it on my desk anymore. All right, here we go. That's FDI. Okay, foreign direct investment into China, up 38%. Okay, Chinese exports, up 30%. Chinese exports. The largest exporter in the world is exporting 30% more. Okay. Holy smokes. Well, Sangham says bullish for Aussie. Maybe. That's more of an import play, Sangham. But I get what you're saying. They're making more, so eventually they'll need, right? But really, for that, you want to look more directly to imports, okay? Because China has a lot of natural resources. It's only when they're strained, and usually not by the quantity, but how quickly they can get commodities is usually the thing. Where's that little piece of silk? Glasses are dirty. Anyways, I can't find that little piece of silk. Where's that little piece of silk? Stupido. So anyways, watch factory capacity utilization statistics, for manufacturing, stuff like that. Could be very interesting. To me, if you were going to look at that as a macro, I'd just say maybe also dollar weakness, because a lot of those exports are going to go to the United States. Remember, if the United States is importing those exports, then they're exporting the dollar, right? So that shows you that dollar weakness is the play, and you know that's my outlook. So that's been confirmed now. So remember, a year ago, I essentially had said that when I said dollar weakness. Okay, I mean Americans deploying capital, whether it's foreign direct investment, which we saw is way up in China, but also importing stuff from China and Korea and Japan. Okay, European cars. Okay, that kind of stuff. And that has been true and now has been confirmed. You could say that, the prediction I made back in 1 year ago, has produced a 30% increase. Okay, so good. Now we can quantify that. So that's sort of another confirmation of long-term trend. Okay, this actually shows Kiwi dollar down. And you remember I was showing you how to scalp yesterday, doing putts actually. Did you guys appreciate the the example of putting that I did yesterday? And then the next question is it something that you are going to try and practice with on your demo accounts as you, okay? Okay. There used to be a training somewhere about putt for dough with the OCO. I don't think that's around anymore. Let's see. youtube.com/fxbootcamp. Search OCO. October 4th, 2012. But I think this is a Kurt Worley video, so I don't think he would have done it.
Shows price action from 5 a.m. New York time yesterday to 8:30 a.m. New York time.
Man, I miss Kurt. What a good guy. All right. So anyways, that was putting for dough yesterday. Sangam asked these questions. Why the 3rd and not the 4th week of August? Because I'm brilliant. Because I'm beautiful. And because I'm humble. And modest. Why? I can't determine why. It just is. Okay, so let's move over to I want to do the yens and not focus on positions. It's not going to be helpful. Okay, let's start. Okay, okay, a couple of things. Would you consider the J&J news an exogenous shock? Kevin, no, that was a Kurt Worley video, so it wouldn't have been me explaining OCOs. I know it's in the old FX Bootcamp training course from 1,000 years ago, so it's probably just sitting on an old machine in my closet somewhere. But I do remember calling it putt for dough with OCO. Cameron, I have no idea. Why don't you ask them? Okay. Probably has something to do with the servers that are set up to be currency trading through currency trading liquidity partners that also have some Bitcoin, but they're not necessarily Bitcoin exchanges, right? So you just follow the platforms that you're on. Obviously, just standard limitations. Okay. Hey, no problem, Chen. So the idea here, so I do actually consider it an exogenous shock because I can't plan for it. I didn't know that the CDC was going to put a pause on J&J this morning. It wasn't on the calendar this morning. I haven't been tracking the trend in J&J side effects, and it was 6 people, so even if I did, I wouldn't have known of those 6 people, not likely. So the thing is, it wasn't something that I can plan for. Is it a black swan? No, what's the difference? Well, a black swan, I think, might bring it the whole house of cards down, where an exogenous shock is just something fundamentally important that can't be expected. Okay? So here's the thing. I don't know what this... there's probably going to be a press conference today from the President of the United States. If not today, probably tomorrow. I don't know what the reaction's going to be. I don't know what people's reactions are going to be. I don't know what the market's reactions are going to be. I don't know if suddenly many, many, many more people get sick and therefore nobody wants to get vaccinated anymore. So, like, I don't know those things, but those things are relevant and would bring the stock market down. If the stock market comes down, interest rates come down. If interest rates come down, the dollar goes up. Okay? And this could then ripple through the rest of the world where, like, Europe decides they're just not going to get anybody vaccinated anymore. Okay? So I don't know. I don't expect a lot of that, but it definitely, the potential for that has increased today versus yesterday. That's why I would, right? That's why I would consider it an exogenous shock. So all the fundamental work I've done up until now has to be updated. Pete brings up XRP up 300% in the last 30 days. Glad you nailed it, man. Okay, in my mind, Peter, you're my XRP champion. You've called it every time, and I've given you my blessing every time. So, yep, I hope you get that yellow Lambo. Lamborghini Mercedes. Yeah. But I'm serious. Yeah, awesome. Good job, man. I couldn't take advantage of it anyways, living in the United States of America. Okay. Oh, thank you on the CPI. Lamborghini Mercedes. I put suicide doors on the tour bus. All right. Very cool. So we got that going for us. Yeah, nobody needs a Lambo. Aston Martin? Yeah, not, I mean, there's a, like service and parts and all that kind of stuff. Yeah. Well, the best thing is to reinvest into your business. All right. So anyways, we got CPI coming out, and this is important. The market's really looking forward to it. So a good number here just might override J&J, and everybody says, yeah, okay, so we don't get, vaccinations slow down, but we're still 100 years, right? 25 times faster than poor countries. But that would be normal. Bloomberg was very upset. They're like, we're breaking the news. OECD countries are vaccinating 25 times faster than poor countries. I'm like, yeah, they're growing 25 times. They're more productive 25 times. Like, everything is 25 times faster, in a rich country versus a poor country. So I'm like, that totally makes sense. 12-unit building? Yeah. I sort of favor, like I was asking my wife if we should put down a goal for the year and see if I can get like 100,000 apartments or something. And say, focus the energy. And, I don't know if I want to own the physical property or just invest. I might put that on my goal this year. Because, prices are down because people stopped paying their rent in COVID, right? And then the next thought that she and I had was, well, what about commercial? Nobody wants to invest into commercial. There's blood in the street for commercial real estate. So maybe that's the time. Huh? Smart and beautiful? She's wonderful. We got an RBNZ interest rate decision tonight. Probably want to pay attention. Yeah. Yeah, at the height of it, Kevin, a friend of mine who buys and sells hotels, he was selling them for 60% below last year's price, and they were thanking him Thank you so much for getting me out of that. All right, just seconds away. CPI, this is a big market mover. The market's been waiting for it. Let me move this actually to, I want to see the indices, see if we can get a tick. Remember, this shock, I want to see overrun by, fundamentals. Lamborghini Mercedes. Should be out any second. Yeah, I think rents are going to go up. I think more and more people will not be able to afford houses. Kevin and everybody else, if your indices are not working, I'm about to launch an update. I mean, I can do it now. Gee whiz. Like, I don't know if I'll have any time today at all. But I have the capacity to very soon launch a new version that'll work for everybody, regardless of MT4 or MT5. All right, so 2.6, better than expected. That's all good. Okay. Nothing out of control, but it's growth. Okay. Very nice. Okay. Take a look at it on a short time frame and see the reaction, dollar versus everything. And they see what? I guess 5 minute. Let's go to the 5 minute. Okay, clearly dollar strength. Okay. So what does that suggest for the bond market? Probably interest rates are going up. Interest rates are coming up. Lamborghini Mercedes. Okay. Yeah, I'm hoping. Okay. So we got to get this to come around, back down. Higher interest rates in the United States makes it difficult for like emerging market countries that have U.S. denominated debt. That's why they're hoping to have everything offset by a lower U.S. dollar. So yields go up, but the value of each dollar goes down. So hopefully there's a different change. But then the next issue is if interest rates in the United States are going up, then South Africa, for example, will need to raise interest rates. And then that would then create more strength for the emerging market currency. So it's going to happen. It's just going to happen over this time, maybe 6 months. Well, I didn't get a haircut, but I shaved my beard. Thank you for noticing, Richard. Advanced automation in the United States. Well, once again, there isn't a labor shortage per se. But I'm telling you, in my town at least, it seems like every fast food restaurant, every, fast service restaurant, I haven't really been to a proper sit down restaurant in quite some time, but I would say, yeah. So your typical restaurant, your fast service restaurant, your fast food restaurant, they're all hiring and they can't get workers. So that's interesting. But would automation change that? Yeah, maybe. But I think the U.S. is still pretty far away from having the person take your order at a drive-through at a fast food restaurant, have the person taking your order be in China, right? And then you show up and the person at the window gives you the food. Like, are we there yet? No, probably not. There's not that much of a need. And the example I always think of is like, and I gave the story recently, so I won't do the long version, but back when my venture capital firm was investing into radio frequency identification systems, we were updating our supply chain. A lot of the things we were manufacturing obviously was manufactured in China, and we had a whole division of that focused on apparel. And so our idea back then was, to start tracking our global inventory with RFID tags. So we talked to our supply chain people in China, and they're like, "Why the hell would you want an RFID system?" They're like, "So we could track everything in real time." And he's like, "Look, we'll hire a guy. He'll follow the box. Like, we're not going to invest all this money into your RFID so you can track it in real time. If you want to track it real time, we'll just hire some dude to follow the box. And he'll report to us as much as you want. If you want a report every day, every 8 hours, every 2 hours, every hour, you want a cell phone, you can just call him whenever you want. He'll follow the boxes." Because China wasn't interested in improving efficiency, they were interested in hiring, right? So that it was cheaper to hire a human, right? So we'll see. Japan, though, yeah, but they didn't care about inefficiency. They didn't need it because it was just cheaper to hire a person, and that was better. Efficiency wasn't good. Employment was good. Right. So anyways, but, there's places in Japan for decades that, fully automated restaurants, right, where you walk in and you get to this wall and you order your food. Right. So you're like, "Oh, I want the udon." Right. Right. And you go, boom. And you walk over there and someone goes, "Ba-da," and you've already paid for it. And you're like, "Oh, cool." And then you go over and you eat your soup. Pretty close to fully automation because there was no waitress and all that kind of stuff. You just ordered your food, you paid for your food, and then the chef gave you the food. And then you walked, because it's Tokyo or whatever, you walk literally 3 steps, 1, 2, 3, and you're at a stand-up table and you stand there, you eat your soup. And you're like, beautiful though. All right, so over the last few minutes, we've had a little bit of a rotation from that strength back to weakness, and I am happy. Oh, so happy. Okay. Okay. Why am I so consistent for making this live stream? It's just part of my supermodel upbringing, I suppose. We're just very dedicated people. Just naughty by nature. Right? OPP, other people's money. Yeah, new trader dollars. Yeah. Cool. Well, good. That's what we want. No, I haven't, Johnny. Sounds interesting. One of the things I did study was the Federal Reserve and their response to the 1930s crisis. And it's really interesting. Because, for example, we were on the gold standard back then. Also, we didn't understand the markets as much as we do now. So there's a lot of things that could have been done differently. Okay. All right. So let me put this back to the hourly so it's not so, I don't want it to be misleading, so we'll take a look at it. Euro gaining some strength, dollar losing some strength. Aussie is a big disappointment. I would hope that this is short-term wrong way. But what can I do? Okay. What can I do? We're on our way down to 70 on the Aussie dollar. Remember, this is Aussie versus everything. So everything seems to be stronger than the Aussie right now. Okay. So that's a disappointment. Same thing with CAD. These are commodity plays. So that's disappointing. Right? But maybe they'll have their time another day. I don't know. The farther you look out, this is looking way out now on a daily index. If you wanted to take this and make it like a trade, it's hard to say it's bearish yet. But if you measure it this way, it is. So, I don't know. It's disappointing, right? I'd like the CAD to be strong versus everything. But we know this has been a good run to the upside because of oil. And oil has nowhere else to go right now, maybe, right? So let's take a look at commodities. These are the commodity currencies, but let's look at the commodities proper. Okay. There's the gold move. That's nice, isn't it? Okay. Now we got to put it on a bigger context. Okay. This is the secondary move that we had. So if you remember, let me get rid of this. If you remember, the trade plan we created like a month ago was this to this, and then this predicts a buy somewhere in here. Okay? Okay, do you guys remember it that way? Okay, it might have been like this. It could be like this, is probably how I would have said it. Okay, somewhere in between. It looks like S1, R1 inside. So what this is simply predicting is it'll make it to the top here, right? So this is obviously where the resistance is. So it's not technically a breakout yet. But if we can get above that, we're on our way to 2,000, if you remember. Okay. Do you guys remember that? One of the things you could do in a scenario like this is use Fibonacci. Okay. And somewhere between the 3A2 and 618 are the best trades. And I would look at this and say, well, okay, because I'm combining it with pivots as well. But, we did this a month ago, maybe 6 weeks ago. Maybe 6 weeks ago, when it was still coming down. How many people can confirm that? That on the way down, we said, we were looking for support. We want it to go up, but we're not going to buy it. And then the second part is not only do we need the up, we need the pattern. Okay? Then this was a potential trade, but aggressive. The next part is we need the higher high. So then we got the higher high. So now we're talking about a week ago. And then this week, the trade plan on gold is buy a dip. 3, right? Either here or here. Not telling you, right? Not telling you that you should be buying, but confirming if you were going to be a bull, and in this case, I'm just bearish on the US dollar. If you were going to be a bull, how would you enter it safely? That's the message I'm trying to give you. You need to decide whether you're a buyer or not a buyer. If you're capable of making those decisions, regardless if you're a buyer or a seller, you'll make money. It's those that can't make decisions that will not consistently make money. Okay, XRP is out of here. Bitcoin, yeah, full disclosure, I'm in at 59. All right, it's a cash trade though. It's not leveraged. So very cool. Okay. Only cash, no leverage. I was trying to get a number, but it's on a different platform. Oh, maybe I could do it this way. Um, 59,800. 59,000. 59,800. Right there, baby. Oh, it hurts. Huh? Wait, I just closed the chat. Anyways, yeah. Maybe. I got, I'm a businessman, so, right? So, right? You want nat gas? Okay. Natty. Okay, you want some natty. That's what we had on crude. Okay. If it was coming down, right? If it was coming down, this is how you do it. And again, the big part of this, it's not a prediction, it's technical analysis. Okay. So there's still a lot of pressure here. And being a bull, you have to be pretty gosh darn aggressive. This is just confirming the market conditions at that time especially were pointing down. Okay. And we also know the seasonality of inventory buildup this year. So that makes a lot of sense. Now, nat gas, there used to be a time when nat gas was inversely correlated. I don't think that is as true or true at all anymore. So if you're a nat gas trader and you're a bull, this is the trade plan. So it just looks sideways. Okay. But if you guys remember the theme, I don't know, 2 or 3 weeks ago, maybe it was my live group. Might have just been the live group, but we're talking about situations like this. Trap, breakout, trap. Right on, 88, 36, 54, and 57. Nice. Okay. Okay. The way I look at it, how far will Bitcoin go as like a big investment? Will it go to 100,000? And the thing is, like, I don't know, maybe it's the sort of the venture capital upbringing, if you will. But like, if I got involved with Bitcoin now, see, I didn't think Bitcoin would go to 100,000, 3-4 years ago. I mean, I owned Bitcoin, in $3,000, maybe even less. But I didn't think it was going to 100. I mean, so I treated it that way. Okay. I think it could go to $100,000 now. So here I look at it and I'm like, probably won't happen this year, but even if it did, if I threw down a whole bunch of money at that 50,000, because we had this, right? Buy it at 50,000, go to 65, right? I mean, pretty obvious. But my thought process is, especially with retirement accounts and stuff, like what would I do? Double my money? I'm like, there's just easier ways to double your money. So I'm like, all I could say is, if I thought it would go to 100,000 3 or 4 years ago, I'd still be in my $3,000 trade and I'd be happy. But I just had better opportunities back then, and I didn't have that opinion. So, so that's all. So I feel good for those that took those trades, and maybe they knew more about it than I do. Maybe they knew less and they were just stupid, but bought a whole bunch of it. Cool, right on. So if they want to drive their yellow Lamborghinis and feel good about being a Bitcoin trader, then great. I just have to remind myself, what was I doing 3 or 4 years ago? And I had more likely opportunities in other markets. I decided not to put, let's say, buy $10,000 worth of Bitcoin back when it was $3,000 or $1,000, right? If I had, it would have been play money anyways, right? And then it would have been great. But would I have bought 10,000? See, I wouldn't have thought about it that way. So probably not. So I'm like, okay, it's just great. But I'll tell you what I did do. I did pay several $1,000s to take an MIT course on cryptocurrency starting next month. Sort of my summer school. So I will be studying cryptocurrencies at the Massachusetts Institute of Technology. So I'm like, okay, cool. I'd like, I get Bitcoin, but what about the other things? And what, and I'd like to know a little more about blockchain and all that kind of stuff. So instead of reading a $100 book, I decided to take a course. And then the next thing would be maybe MIT also has I think it's 6 or 7 classes that you take. So imagine that would be probably 2 years. So imagine they have a 2-year course on blockchain, not cryptocurrency, but blockchain. I thought, oh, well, that'd be interesting. Kevin says you really must like Massachusetts. Already finished with Harvard. Yeah, I'm long done Harvard. But the thing is, it's like, it's just the best. So I didn't say I want to only go to take classes at Massachusetts schools, right? I don't want to go to Boston University. I don't want to go to Tufts. Hey, look, I took a cryptocurrency at Tufts. What do people say? What the hell is Tufts? Then I say, oh, I took a cryptocurrency course at MIT. MIT? Yeah. Johnny's like, yeah, but what's the difference, right, Johnny? So put it this way. The guy teaching the course obviously is a professor at MIT, tenured professor at MIT. He runs their cryptocurrency lab and blockchain lab. And his last job was the head of the CFTC, the Commodities Futures Trading Commission. You know, the one that does the Commitment of Traders report, the one that oversees the National Futures Association, which oversees Forex. You know, that guy, basically, if the NFA is your boss, it's your boss's boss. Remember that guy? Yeah, he's my professor. So I'll get a kind of good look at the regulatory side. Oh, and before that, before running the government's overviewing, authority for financial markets that oversees Forex, before that, he was a partner at Goldman Sachs. So you're like, oh, okay, that's my professor. So is that worth more than $100 book written by some yet another guru? Yeah. All right. So he was a partner at Goldman Sachs. Then he ran the CFTC. And now he runs the cryptocurrency lab at MIT. Okay. Yeah. Cameron's like, we get it, right? Yeah. So like, did I choose MIT? No, but I love it, obviously. But so I want to get this MIT hat, and it says genius on the side, and then it has the MIT logo. And I want people to say to me, oh, did you get your degree at MIT? And I'm like, no, I got my master's from Harvard. I did MIT for fun. And they just fall right into the trap. And then they're like, oh, what an asshole. And I'm like, I know, right? So yeah, it's all worth the joke, man. It's all worth the joke. But I might learn a few things about cryptocurrency. Let me throw down the thousands of dollars. Let me take the course. And if my knowledge gets bigger, then you will get more. Can we have the name of the course? Cryptocurrency. Yeah. That's the course. So anyways, yeah, Veritas. Right? So anyways, so I'll get the hat just so I can belittle my neighbors and look like an a-hole. Hey, that's what neighbors are for. If you can't belittle your neighbor, right? No, I'm kidding. Love thy neighbor. So anyways, speaking about love thy neighbor, I am making money on cryptocurrency today. Thank you, Bitcoin. So maybe we can squeeze this out to 65. Yep. Yeah, the next one would be blockchain, right, Kevin? But I only have so much time because I want to do a summer school with you guys. Right? I want to do summer school with you guys. It's a tradition that I've done for many years now, but I'd like to finish my macro class. Okay? Get it all tweaked out and all that kind of stuff. And I also want to redo my macro class. So I'm thinking this summer there'll be 2 courses that you'll be able to choose. Level 1 will be macroeconomics and level 2 will be monetary policy. And so we'll scrub the whole courses and redo everything beautifully. I have a PhD student working for me creating the charts, which are, if anything, too nice. And we'll run through all of that this summer. So imagine you literally become a fundamental expert this summer. Okay. MIT is great. Oh, right on. Yeah, MIT is great, right? Yeah, what's wrong with MIT? Nothing. All right, so that's cool. So we'll move on and we'll take a look at... I want to stay out of the obvious. I want to stay out of the hypersensitive sort of news stuff. What should we do? We did exotics. I think what I'll do is I'll bring this up and just sort of reaffirm shorter term plans. Okay, if you remember these step ups. And so what we were doing is